Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October the 19th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am joined by Brandon Beaver. Brandon, I love your background, by the way.
Thanks.
Yeah, it's nice. It's very, very cheery. You just switched it too. Like it was like dollar bills and dollar signs, and now you're like a teacher all of a sudden,
2 + 2 = 5.
right? And that is Common Core math. No, sorry, I shouldn't have said that. I apologize. I'm a parent. That's how come I got that joke and I said that joke. I am a parent, guys. If you're listening. Yeah, it's interesting, man. We are about a week and a half away from Halloween, the second biggest commercial holiday in the United States, and half of my grocery stores have Christmas up and not Halloween. I'm going to make this investment and stock related real quick and surprise you with this. I believe that was a supply chain issue, and that they did not order up enough Halloween items. They couldn't get them in, so they just over ordered on Christmas to make sure they had enough for Christmas.
Probably.
And that's what I'm thinking, because there was a lot of backup in the supply chain, and everybody who's listening right now is like, David, they fixed all the supply chain issues. I'm like, yes, but they order Halloween decorations and candy and all that stuff like 4 or 5 months in advance.
Yeah.
So when they made these orders, there was a long time ago, and there was issues, and that's what I think it is. I don't know. Maybe people just went in and overbought on Halloween, and now they got to throw Christmas. I just thought it was a little weird because it's not even Halloween yet, and just everywhere.
Everywhere's gone. Yeah.
I even saw ads on TV from Old Navy for Christmas, and I was really disappointed in that. I was like, after Halloween, guys.
Yeah, I'm already annoyed.
Yeah, I already told you I'm not getting you your Christmas because I was going to get you, so you got to deal with it. I still may surprise you with that, by the way. So
cool.
Gonna put that out there. Now you have to get me something. Now I'm getting you something. So fun times. I'm sure people love listening to us right now, but let's get into it, shall we?
Yeah.
Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live discussion here on the show. We don't discuss it. Today was probably one of the first days in a while that I actually paused and said, what was the name of that company again? And I actually looked it up ahead of time after he told me it. So I did get a few minutes to peruse one of Brandon's stock picks here, guys, but I'm going to hand over to him because he has the most meat of the show. Brandon, take it away.
I had a lot of time today to research because I got my first day off since October 1st. And Dave, I know, unfortunately for you, you can't tell this, but I'm not wearing pants right now.
I can tell.
All right. Netflix reported earnings yesterday. They beat across the board. It's a pretty good quarter for them. Maybe the comeback quarter. After 2 straight quarters of subscriber losses, they finally went positive again. So let's go over the earnings a little bit. Revenue came in at $7.93 billion, and earnings per share came in at $3.1 billion. I'm sorry, $3.1. This exceeded forecasts for $7.4 billion in revenue and earnings per share of $2.19 respectively. So they absolutely knocked that EPS expectation out of the park. Netflix grew 5.9% to revenue to $7.93 billion, while net profit fell. So a little bit of a mixed bag there. Net profit fell 3.5% to $1.4 billion, and the operating margin fell to 19.3% from 23.5% a year earlier. No surprise here, currency headwinds have been hitting internationals all year, with the dollar being strong relative to other currencies. So not a surprise there, and that's why investors did not react negatively to those numbers. They see that, I think, as Transitory, Dave. I'm going to use the word in the
What?
correct
What?
way because it's probably transitory. All right. The company added 2.4 million new subscribers in the previous quarter. They had forecasted a net gain of 1 million customers, so they doubled that, more than doubled it. Netflix said in a letter to investors, while it's in the early days, we're starting to see increased profit focus across the industry. And that their best estimate is that all of the competitors in streaming are currently losing money in streaming while they are profitable. So they said it's got that competitive advantage because they focus primarily on streaming, while companies like Disney have multiple different focuses. The ad tiered subscription, which I was essentially negative on, I am now positive on.
So
Specifically,
I'm going to interrupt you here. You were the one that was negative on it. I was actually said that is a positive for the company.
yeah, I think that's what I said. Did I say I said I was negative on it, I think.
I was now I was negative on the company because they did not have an ad tier.
Yeah.
And I said it's a dog because every other company has this and they don't have it. And then 3 days later they announced, "Hey, we're coming out with our ad tier." And I was upset and I was like, "Thanks Netflix."
So Dave, this is a $6.99 price point, and they think on the low end of this, it's going to be revenue neutral for now. That's if it doesn't do, if it delivers on the low end of their expectations. I'm positive on it because $6.99 is a great entry point for anybody that currently doesn't have Netflix or that's held out on it. Almost anybody can afford $6.99. And I have myself on multiple times when it comes to streaming and subscriptions, went ahead and gotten into lower price tiered. And then if I really liked it, I moved up. That's how I started at Hulu, was with an ad tier basic subscription, and I moved up because I liked it. I think that this is actually going to bring a lot more revenue and a lot more profit to them, because I think a lot of these people that get in at $6.99 are going to move up to the more advanced subscription tiers like 4K and such. Go ahead, Dave.
Well, I mean, I had some comments, but then I actually like where you're heading with this. I agree with you. I agree with you on that. I know you got more, so continue. We'll delve into these numbers a little bit more, but
Yeah.
A lot of people are missing, like, Netflix is saying they're focused on the streaming only because that's the core of their company. That's all it is, versus a Disney or somebody else. But Disney has people who are just focused on Disney Plus. I believe that Netflix has just produced better content than a lot of other people. Disney Plus, people jumped in right away because, oh, this is Disney, great, they have a whole catalog. But then the new stuff that they were releasing, because when you have a streaming service, you got to continually release new items that are for your site only. The new stuff for Disney Plus has just not been as pulling in the people as they thought.
Yeah.
Hulu's really fallen short on this for them, but Disney Plus has done better than Hulu. But Netflix, via all these Ryan Reynolds movies that he's put out for Netflix,
And
they
the
have a hit,
Dahmer movie and Virgin River and the
right?
new Thing series season.
I mean, they even have a hit reality show in Bling Empire. So I mean, Netflix has had a very successful amount of Netflix only content that they've released that have been huge, and actually gone up for Academy Awards on some of their shows. And so they're producing good content. And I think that's the difference. They're coming out with now seasons that were delayed during COVID, and that's where you saw the slowdown. Then all of a sudden now you had a season 2 of The Witcher. Then you had season 2 and 3 of these, and now season 3 and 4. And now it's like, okay, now we're getting seasons in. Now I want to wait and see for the next release of the season.
Yeah, I think that's a good point too, and that could have been a reason for the slowdown and negative subscriber growth. There wasn't a lot at the time coming. Not only that, but you saw a exponential probably unsustainable subscriber growth from the COVID, lockdowns. And then once lockdowns were over, then a lot of those people stopped subscribing to Netflix and started going back out again. So, I think it's all pretty predictable, and we're just starting to level out. Reed Hastings said that they thank God they are done with the negative quarters for subscriber growth. But they also said that they're going to stop releasing subscriber guidance, and they think that investors should start focusing on profitability and revenue growth. So
now I saw that line and I did want to bring that up. I was waiting for you to bring that up because any kind of service like this that scares people, because we always look towards subscriber growth. It's like with Tesla, we always look towards how many cars did you actually get created and made and off the line. With any streaming service, it's subscriber growth. Where is that at? How's that working? It's not necessarily your top and bottom lines. And that's a big mover. Now you're telling us that we just need to get over that and move on. I'm like, that's going to be a sour taste in some people's mouths.
Yeah, maybe, but how many more subscribers can you add if you've already got 223 million?
There's 8 billion people in the world, man. They can get up to 8 billion.
Yeah,
they can add 7,700,000. That's how many more they can add.
Well, then you got to think about like how much can they add to their servers. If they're going to go for India, they got to go for Bollywood. If they're going to go for South Korea, the Korean dramas, which they have recently, they've got Korean dramas on there now. But how many markets can they successfully target to keep that subscriber growth going? I think there's plenty they can do for revenue and profit with the subscribers that they already have. But how many markets can you actually successfully target? You're not going to have infinite server space. And then once you start getting to, more markets throughout the globe, you're going to have to sacrifice something somewhere more than they already are, because look how many seasons, or not seasons, but series they've already canceled.
Well, they overexpanded, like you said. They took a huge jump trying to go international really fast and create all these different international movies. They're Netflix-owned created movies. And they lost a lot of American subscriber base, which was the core base of Netflix, because that's where they came and grew out of. And so they readjusted, focused on the series and the shows that were actually making them money. And I believe this is a media company that focused on the media that was working for them and changed their direction. I don't look at it as much more of like a typical, this is a cyclical time for streaming because of COVID. I understand your points on that, and I agree with some of it, but I believe this is a media company that actually just said, you know what, these are the shows that people are watching because they can track that. Let's just focus on that. Let's continue pumping out Ryan Reynolds movies because everybody's watching those.
Everybody loves Ryan Reynolds,
right? And then well, let's focus on the shows that people are watching and just give us another 2 or 3 seasons of those. And that's what I believe they've done. And that's why I believe they're seeing the subscriber growth.
I'm still angry that they canceled the Santa Clarita Diet, but I'm not going to go on that rant because this is a clean show and I'm not supposed to cuss on it. So
there you go.
So they said that the increase of a lot more users via this $6.99 price point will in the future bring about significant revenue and profit. Ad inventory for this $6.99 price point tier is already almost sold out, and it hasn't even been released yet. And they said the initial ad demand is very strong. So I think they're on track to get pretty good revenue and pretty good support there from that ad tiered entry point.
Right, because Aviation Gen and Mint Mobile and Wrexham AFC are all advertising in Netflix now.
Yeah, and so
that's a joke because they're all owned by Ryan Reynolds.
So and then also, I mean, they've got a ton of content, so there's plenty of space for them to place ads in that $6.99 tier. So the fact that they're almost already sold out of ad inventory, that's a lot of ads. It's a lot of advertisers there, especially, when everybody right now is scared of whether you think we're in a recession right now or whether you think it's an oncoming recession. Everybody's kind of scared about this business environment right now. So the fact that, companies are coming to Netflix and really, like, there's strong demand for these ads when Meta and Google have said that ad demand has fallen for them. I think it's good news.
It is good news. And you know, I think the ad market's strong if you have a good product. If you can show that there's value in it, there's still going to be people who want to place ads. Like I said before, I'm hearing ads right now all the time for the Medicare ads. I see political advertisements and hear it constantly.
Oh,
I'm already sick and tired of it, and we still got another 3-4 weeks to go of this. So yes, there's room for ads if you have good product, and there always will be. But the competition is hot and heavy in that area. It's heated.
yeah. I mean, what the exception to that rule is the politicians never have any good products.
Well, they're the ones paying for the ad, so
I mean,
the
yeah,
the the Netflixes and Disney Pluses don't care as long as they paying for the money, right?
yeah, that's true. They're just selling verbal snake oil. All right. So I want to give you a nice surprise here and a rare occasion in this environment where I'm calling a buy. And, this is just right next to Disney. I called a buy on Disney a few weeks ago and bought it myself. Doing the same thing here with Accenture, with the caveat, the fact that, like, this is a company that people like, that businesses outsource their analytics to. So, if we have a recession deeper than what we already do, because I believe we're already in a recession, but if it goes deeper and things get worse, which I think that it might actually, I'm pretty bearish on this economy right now. It's well noted, but Accenture could be pretty. What's the best word to use? It could be sensitive to a downturn in the economic environment. But I still think it's a good value for the next 5 to 10 years. And I'll explain why. So first of all, let's get into what Accenture is and what they do. So they've got 5 different industries that they service. It's communications, media, and technology. This is 20% of their revenues. This includes communication, high tech and software and platform markets. Services here are aimed at accelerating digital-led initiatives, including moving to the cloud, embedding security across the enterprise, adopting new technologies. Then there's financial services. This is 19% of the revenue. They have domain expertise, which includes application development, integration, and consulting for banks, brokerages, retail banks, credit card companies, wealth management, treasuries, pension funds, and market data providers. 18% of the revenue is health and public services, which I don't think that's going to be affected at all. I think that's an absolute need no matter what. The company works in the health and public services sector to organize and reduce costs and improve the quality of healthcare services. The public service side also helps agencies reduce overall costs and improve the service delivery to customers. 1 second, Dave. Products here, this is going to include automotive, consumer goods, industrial equipment, retail, life sciences, quite a broad group here, but this is 30% of the revenue. It's the largest business line. They have a range of platforms and services that expand business models and positively impact consumer experiences. And then resources and commodities, this is 13%. This is going to include chemicals, energy, natural resources, utilities, and they specialize in a wide array of work, including data optimization, supply chain analysis, and improved risk management capabilities. I think, Dave, that this is just going to continue to grow. I think that more companies that want to focus on what they do, and what they sell are going to continue to outsource the analytics to companies like Accenture. And the reason that they're doing this is their employees are getting just like hammered with a lot of data that they just don't have enough time to sift through and to make sense of. So to have specialists from Accenture, especially to have such, a wide range of expertise to be able to do this for them, I think is a good value, and I think it pays off greatly. Go ahead, Dave.
So yeah, no, 100%.
Yeah,
They
no.
use a lot of no, right? They use a lot of AI in their systems and how they go ahead and analyze and collect this data. And they're basically what I would call a software company. By providing this data, they allow their software to be licensed and used and go into other people's systems and pull the information they need and then spit it back out in a way that's more informative. And they use that by using software. AI software is a big proportion of this, and AI is a huge industry that is all aspects of our economy today. And I would argue that you said the healthcare was probably the only one that you can't see them ever slowing down in. I would say financials, man. Are you going to tell me that the banks are going to quit using analytics in what they do? No, that's always going to be there as well. The only other one is consumer discretionaries is the only one that you're going to see up and down. So
Yeah, and the consumer discretionaries, even, I think that there's going to be a floor on that. I mean, I've been in retail for decades, and you worked in retail for a very long time too. And the focus is to get out on the floor and help the customer and sell what you're supposed to sell. And when you're getting, just I mean, pages and pages and pages and pages of data that you don't have time to go through and you don't have time to make sense of, somebody else is going to have to do that for you.
yes,
Otherwise you're going to go out on the floor and you're going to play something out on an end cap that, you may have a personal bias for, that you may think sells well because of your bias, but the customers don't actually care for it. So to have these kind of analytics to tell you where things should be out on your sales floor and what you should be selling and where your gross profit margin is and where your best turnover is, it's a huge benefit that companies should have. And quite frankly, a lot of retail companies are lagging in this area. So I think retail is actually a good benefit here. It's a small percentage of that product area, but I think it's set to grow throughout the years.
yeah, and so people listening, Brandon and I met in retail at the same company, but we were on two different sides of the coin.
Yeah,
Brandon's on the sales side of the coin. I'm on the logistical side of the coin, and I would say the same thing about the logistical side of any business, Brandon. We analyze that all the time to find the best route for the best way to ship our trucks, best times to ship our trucks. Companies will even look at the best day of the week to get the most productivity in the products that are fastest at the cheapest cost. So there's all kinds of data to analyze it. So I agree with you. It's a great company as long as they remain number one in this area that they service, then they're going to continue to grow because people are going to continue to use them, and it's a great buy right now. It's down $200 a share from where it was at the beginning of the year, so it's down almost 50%. And I would say at that price right now, because the whole market as a whole, I would say is not down 50%. So for them to be down 50% and they're number one in their sector, it is a good buy just off that alone if I was a chart guy, but I'm not a chart guy, so I look more into it. And all their contracts are still strong, all their numbers are still strong. It is a company that is looking to be oversold right now.
yeah. They just won a $189 million contract from the CDC to help the CDC integrate into the cloud. So it's not slowing down. I mean, that's not a huge contract when you look at like Microsoft and Azure and stuff like that. And the military contracts that Microsoft was awarded that Jeff Bezos cried over for like a year. You remember that? I don't remember how
Yeah.
long that was. I'm old, and by the time you start to get old, time goes by faster. So that could have been like 5 years ago. It could have been 10 years ago. I don't remember. I'm rambling. Anyways, positive note here. Zacks just lowered their recommendation to a strong sell, which to me, that must mean that it's probably bottoming because Zacks sucks.
Yeah,
I
right.
think I love I
But
love CFRA, and CFRA actually, like, I read their reports all the time. And full disclosure here, CFRA is what got me to give attention to Accenture and to research it for myself. So positive analyst, great analyst, CFRA. Zach's terrible.
I mean, and yeah, everybody get your own opinion on Zax. So I know some people who love Zax, and they do well, and for them, yeah, everybody's different. Everybody trades and invests differently. Um, I will I will say that I'm a little worried that it's 2022 and the CDC's just now integrating into the cloud. Why does that not surprise me? But yet at the same time, it scares me.
It's the government, man.
They should be ahead. They should be
Look,
ahead
we're
technology.
still driving on the same roads that we did, 80 years ago, and we still have the electric grid that we did, 100 years ago. And I'm not going to go on that rant again, but
Well, I mean, yeah.
mandated monopolies and government owned anything is always like way in the past.
So Accenture, buy.
Yeah.
Accenture, buy.
Yes, reel me in. Accenture is a buy. I agree. I mean, a lot of customers here, a lot of big time customers. Visa is one, just off the top of my head. Let me see if I still have them pulled up on my phone. I don't know if I do or not, but just for the sake of the show, Visa. There's Coca-Cola bottling companies. There's all kinds of different big companies that they use. They're in 50 different countries, 200 or 500 cities or something like that. They're everywhere.
Nice, nice. Let me veer off for a second here. I want to spend 5 minutes talk about a company that I've talked about numerous times here. As everyone knows, if you've been listening to us for last year and a half, 2 years, I don't even know how long we've been doing this. Feels like forever. If you've been listening to us, I'm big on following the AI taxi companies in the world. Didi, Baidu, in the United States, it's Waymo. Waymo was the biggest one. It's owned by Google. They also do AI trucking. So they're trying to compete with Tesla in that aspect of trucking. But what I'm going to talk about is the taxis, right? So these AI taxis, which they had a pilot, you could say, ran in San Francisco, and it did well, and they still run it in certain parts. And it's not public. You have to sign up and go through this process to use their service there in San Francisco. But the public portion of this is in Phoenix. So in Phoenix, anybody can have their Waymo app, upload it, and call a robot taxi to come pick you up and take you somewhere, right? They're going to be expanding that now to Los Angeles. And I'm just over here, Brandon, screaming, it's about time. What is taking so long on this rollout? So first of all, I don't understand what's taking so long for Google to roll this out to more than one city now.
I have a theory.
Because go ahead.
Louis De Palma has organized a union in California to stop automated taxis. And that's a joke that only maybe 10% of the people on here are going to get.
Well,
Taxi,
right?
Remember the Taxi show? That was Danny DeVito's character.
Yes. Here's the thing. I see this rollout coming, right? They're going to have more of these automated taxis. This is going to be a negative for Uber and Lyft, and I think it's going to push out whatever's left of the taxi companies. If anybody's holding on the cab companies, they're going to be gone as soon as this rolls out to all the other major cities. It's a huge advantage for Google. This is another reason why you should be investing with Google, because this is where they're going to be going. But are we going to see a Google city such as we have Baidu City in China, to where all the taxi cabs, all the cars are all Waymo cars, Waymo taxis, and it's Waymo buildings and Google this? Is that what we're going towards?
Unions across Europe and across the United States will push back hard. And I think it's going to be a lot harder to get into cities like New York City, where the New York taxi cabs still rule the streets because of union pushback and because of politics. But yes, I think eventually that's where we're headed. I think it's the best place to go. I think it saves a lot of resources, and I think it's better for the economy, and I think it's better for travelers too, because it'd be cheaper.
But are they cheaper, or are they charging the same price and just not paying a live body?
Eventually, they're going to be cheaper because they can be, and that's all competition. If you could be cheaper than your competition, then you're going to win out if you're providing a good service.
No, all right. So who was that guy from Japan? The SoftBank, Masayoku or Masia? I'm pronouncing his name wrong.
It sounds
Uh,
familiar.
what is it?
It sounds familiar, but
Yeah. He owns SoftBank, and he had that same philosophy you do, Brandon. So he bought a. This is years ago, about 10 years ago. He bought a telecom company in the United States, and he went in and built all this infrastructure up. And he went in and he said, "Look, we're going to have lower costs than everybody else, and we're just going to have lower costs, and we're going to steal all the business." Well, that company did not steal all the business. That company was called Sprint. Um, and but he did build up the infrastructure because he invested all that money and bought all these rights and everything else and trying to compete and have a lower cost. So it didn't work for him. However, it did work for T-Mobile, who bought Sprint, because now T-Mobile has the best infrastructure in the United States because they bought Sprint because they were failing.
I think that was my first acquisition deal that I ever bought into.
Really?
I believe it was. Yeah.
Well, so I mean, but
one.
So my point is, though, it didn't work for him.
Yeah.
So that philosophy doesn't always work, and then back to Google and Whammo here. Is providing this service going to work for Google and Whammo? And where is Apple? Apple was the one who is meant to be leading the charge on this, and I don't see Apple anywhere near this. I see Tesla on the trucking side, and Whammo's competing with them. I don't see anybody else really competing with Whammo on the taxi.
I don't either. It's not going to be Baidu now with the China and U.S. relations,
right? So I mean, who's going to jump in here and compete with this? And here was the thing that was funny, and we joked in the past about the Baidu City, where Baidu owns the trains, and Baidu has the autonomous vehicle taxis, and Baidu owns all these other things, and we've all joked about the corporation cities and the corporations battling each other out in 100 years from now in the corporation wars. We've seen it in movies as a big joke. And I hope we don't get to that here in America where, corporations own cities. But I mean, I don't know, man. If Google owns every aspect of your life in that city, that kind of is the same thing, right?
Yeah.
It would be. It's the umbrella corporation, man.
Yeah.
The umbrella corporation. Where's Mila Jovovich when I need her? If you get that, yeah, we could get along if you get that joke.
We got taxi jokes. We got, yeah.
Right. But yeah, that's just what I wanted to point out, guys. I mean, there's lots of little articles and little things like that I view and I look at and I use to determine investments and trades for the future. You got to keep your eyes open, read these short 5-minute articles as they come across. Don't skip them. Take a minute. If it's a little short article, might give you some information, because then you read something else about, oh, hey, here's another company that's building a new AI driving system. Oh, and they've partnered with Google. Google owns Whammo. Whammo's expanding. This might be a buy for this company. And that's sort of how you get your ball rolling on that. But go ahead.
Yeah, well, I was just gonna transition, if that's all right, because
no, that's why I say go ahead and transition. Sorry, yeah.
Yeah, you're good. You've said everything that I was thinking on it. I think the Baidu cities probably will come here to the United States. There's a lot of mandated monopolies here that might get in the way with water companies and utility companies, but I'm not so negative on that, though. I'm really not.
Wow.
And I didn't even really care about the whole metadata thing. I know a lot of people don't like their data being sold, but if it's being used for analytics and for just advertising, and it's going to get me better products and cheaper and better ad targets, I don't care. I really just don't. And I know a lot of people do, and that might get me hate, but it didn't bug me whatsoever. If my data was being used to find out what candidate I voted for or what political group I belong to, which that was the Cambridge Analytica thing. I know that. I understand it. But if it was being used to target and harass me and oppress me, then I would be upset over it. But if it's just being used to target even political ads or, ads for, pet food, not a big deal in my life. And that's just me. But I do think that Apple is doing a great job with advertising themselves as a data privacy company. And big ups to them because it's working.
Yep. All right, man. What else you got? What else you
Sorry
got?
for coughing on the mic there, but so CFRA, I mentioned that I really like them. They released a report this morning about housing, and single family building permits were down negative 3.5% nationally month over month, negative 15.3% year over year. All regions in the United States showed declines month over month and year over year. This is a huge red flag for the economy, they say, especially for entry level and move up home categories, which are the largest home building segments. Now, with that being said, house prices still haven't really come down that much. Interest rates are flying high. And if you are one of the people buying a house at this moment in time, I think you're getting screwed. I think it's a really bad deal. The U.S. Census September 27th report showed that new residential sales had an average sales price in August of 2022 at $521,800, and mortgage rates are approaching 7%. This being a new drag on home building demand, but prices still haven't come down yet. So if you're buying a house right now, you're still buying at record price levels while interest rates have more than doubled. And I can tell you right now, my mortgage company has been ringing my phone off the hook to refinance. And initially, we actually thought about it because we've got some home repairs that we want to do. And we thought, it'd be good to have the cash on hand. But then we found out it was going to double our interest rates that we currently have on the house. And no, thank you. So I'm just saying right now, I'm still staying away from stocks like KB Homes. And I am very interested in the next Home Depot conference call from a retail perspective.
I think Home Depot will always do well in recessions because people need to repair their homes. I do agree. Stay away from KB Home, Lennar, all those other home builders, because you can't keep this up with the economy not doing well. Consumers in America are still spending, and I don't get it because they're spending and they're increasing their household debt to record levels yet again. And we are refinancing this car for a fourth time, or we're refinancing this house again. And you're trying to live a life you can't afford. I don't want to sit here and put myself on the soapbox and tell people about their finances. We're all adults. You make the financial decisions you want to make, but if you just if we all could just get together and put a break on this economy and not buy anything we don't need for 1 month, we might be able to get the economy going to where we need to go.
Yeah, 2 years ago, refinancing would have been a great idea because a lot of people would have dropped their interest rates. Right now is a terrible, terrible time to do it. I understand that some people may have to, but it's not a good time. And I want to say this: you were talking about Home Depot doing well in recessions because people keep their houses and they want to do home remodels and stuff. But it's a double-edged sword because Home Depot and Lowe's both get a lot of consumers,
Business and contractors.
Yes, home builders to buy the lumber and the tools needed to build new homes. So they'll get hit on that, which is why I'm very interested in hearing what they have to say as far as the housing business goes. Because every time we have a situation with housing where we start to think that we're in a bubble that may be collapsing, then all ears go to Home Depot and Lowe's for retail.
Yeah, and we've talked about the current financial state and what to look for. The first domino that could fall is, margin calls and pension plans, the Apple credit card. These are all dominoes that could fall first and are warning signs that there's other dominoes getting ready to fall. And you want to watch out for the Lehmans and make sure that when that Lehman goes under, okay, everybody else is going to fall here shortly, so we need to get out of the way, and have cash on hand at those moments. Be in cash. Cash will be king. Because if you can come out the other side of this, here's what if you come out the other side of this, and you're basically debt free, besides maybe a mortgage, and you got investment money, and you got money in investments, you're going to be doing very, very, very well.
Yeah. So here's one piece of advice that I have. Don't go out and buy the premium brands right now. Money is really, really, really easy to come by at the moment. Still, even 2 years after, the stimulus was passed, money is really easy to come by. The problem is it's also really, really easy to spend at 9 point whatever percent inflation we have right now. So go out, buy the ramen noodles and buy the off-brand stuff and save that money, because on the flip side of this is deflation. And the value of the dollars that you have and the purchasing power that you have with those dollars right now is going to exponentially increase when deflation kicks in. So not a bad idea to be in cash.
In cash or in long-term investments in
Yeah,
solid companies
I agree.
that
Like
aren't going
Accenture.
anywhere. Yeah,
Accenture's
I mean,
got a phenomenal balance sheet. They really do. They're well in the profitable range. Their depth is very, very manageable. So I think Accenture. I like Disney. Get Apple on the dips.
do you just want to finish up with your final thought there?
Yeah. So what do you want to do about Tesla though? Because we were talking about that for a second prior to this. You said you were a bull. I'm a little bit more wary on it still. It's been my white whale for years and years.
Yes, it has. I was about to bring that up, but I've gotten Tesla wrong too sometimes. But for the most part, I've gotten Tesla right. I would say I'm probably 70% of the time right on Tesla, at least, if not a little bit better. But Tesla looks good. Tesla looks strong, and it's mainly because of the solar business, the battery business, their autonomous vehicle business. It has more to do with those things than it has to do just with the electric car, because Tesla's in so many things as far as creating your own electrical grid. You could put up solar panels, have a battery on site, and this is all via Tesla, and they could just throw it on the roof, and it can help you get off the grid a little bit, because that's our goal, is to everybody get off the grid, right?
Yeah.
Or at least if you want to help out the climate and climate change, you're going to put solar panels up. Tesla's one of the biggest players in solar panels. These are the things that Tesla has. So they're all about this. And Tesla charging stations, as we had this infrastructure money still being spent, Tesla's going to get a chunk of that money for charging stations. So I see a little bit bigger. Tesla expanding its other businesses other than just car sales right now. And that's why I'm looking as a bull on Tesla.
So price earnings ratio right now, I know I talk about it a lot on the show, but I think it's overrated in many aspects. And so when you see a stock like Tesla with a price earnings ratio of 70, I think that's more justified, because there's a lot of growth to go here still, even with a company that's been around for, more than a decade. There's still a lot of room to grow for Tesla. So 70, I'm not so worried about that price to earnings ratio. The only thing that makes me a little bit wary is the fact that it's so volatile. And I think a lot of people right now are searching for calm in the markets and searching for something that's, not going to take their portfolio on, 10 to 20% swings on a regular basis. So Tesla still may have some selling pressure on it. But long term, Dave, I don't think that this is a bad deal where it's at.
Tesla has short-term pressure on it because of all the Twitter news and Elon news, and Elon drives some headlines that are negative. It's people buying and selling the headlines based off what Elon says in Twitter. It is not about the fundamentals of the business. Secondly, I have more points here. Secondly, Tesla would have a higher sales, but they cannot create cars fast enough. That's their problem. They are putting them out as fast as they possibly can. They're putting out solar panels as fast as they possibly can. They cannot create these things fast enough. They continue to build more and more factories. Why? Because they can't keep up with demand. That's why you have that PE ratio so high, because there is a lot of growth there. If they can actually keep up with demand, their sales would be tremendous. Forget about it.
And the PE, even at the current price level, would be much lower. I agree. And I like that point, because I didn't actually think about it until you said it. Elon actually said, though, that he does not have to sell more Tesla shares to fund his Twitter purchase. He is selling a perfume now. Did you see this?
I did. Is it a cologne or perfume?
It's one of those. I don't know, but he his Twitter bio now says perfume salesman.
Well, I
And
mean, he sold what, like a couple million of them, or 10,000 of them. I think it was like 10,000 of them in one day.
and then he tweeted, "Please buy my perfume so I can buy Twitter."
Right. And people bought. See? Yeah, people bought. You'd be surprised. You'd be surprised what people will purchase into. I tell you what, I'm going to give you my final thought right now is I am bullish on Tesla. I think there's a bright future there, but am I going to buy it right now? Yes. Yes, I would buy it right now. Because the price has dipped down low enough. I would buy Amazon a little bit below 200. I think Amazon has more troubles in it. I would look at them in the 190s and then buy. Once they break the 200 support level, then I would buy Amazon. I'm looking forward to in the future with that. But I will say, Brandon, people will support a good cause. So back when I was a young lad, this is back in early 2000. And this was the year 2000. So 22, yeah, right. 22 years ago, I created a website. And I was trying to contact with some solar companies, specifically like the one out in Las Vegas that has been in many movies and other ones. And I tried to create a website to where people could donate $1 a month, and this money would be used to build out more and more solar farms around the United States. And these companies would get the money for free, and I would just run the website and send the money to them to help out with their to grow solar panels. And I had a lot of interest in doing that. And the problem was the solar power companies were not interested in dealing with me. I was offering them free money, and they just ignored me at every shape and turn. But I give you that example is that people, when Elon Musk joked about, hey, help me buy Twitter, this perfume, people are willing to put out money for a good cause. So if you find a good cause like that, go ahead and do it. I mean, I could list off all the good causes I've done. If you guys are interested, I know, you may think that Dave is one way politically or one way or not, or this other way politically, but I will tell you, I've tried to do a lot of good for the community as much as I can. Also around 2000, 2001, I was in talks with a Professor Godsill out of Milwaukee area, and how to create warehouses where you can grow tilapia and cabbage in the same building in a self-contained system that just costs that to start up $40,000 and can be used to build anywhere in such as urban areas in India and create food so that people would have plenty of food growing there. And this is a project I was part of for a while, and I was very passionate about trying to stop hunger in certain areas of the world. So these are all things I've done personally in my private life, guys. But yeah, Brandon, people, if you say it's for a good cause, people will fork out money like right or left. This country still is good. There's a lot of good people in this country that are willing to help out. I think Elon was joking, but people still will jump on it, right?
Yeah.
That's my final thought. What do you got, Brandon?
I like Accenture for the reasons that I've already outlined. I do think that it's recession sensitive because currently I think a lot of businesses view their services to them as discretionary, but they're really not. I think to grow and move forward in business, you're going to have a leg up on everybody else if you've got your data analytics on lock. So
yep. I agree. All right, guys. Well, as always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.